Welcome to Common Sense Investing. My name is Cameron, and today I'm going to introduce you investors to one stock on the stock market in 10 minutes or less. Let's go. This is not a new stock to this channel. I previously introduced Sabio Holdings May 10th, 2024 at a Canadian share price of 24 cents per share. Since my original video, Sabio Holdings went up to 77 cents Canadian for a 250% gain. However, it's now time for another Common Sense Investing versus the stock market video, down 52% from their 52-week high. Can Sabio Holdings recover? Well, to get started, let's talk about what Sabio Holdings does, the connected TV streaming opportunity. What does that mean? Let's start with their core business, Sabio. Sabio offers custom CTV and OTT advertising solutions for general market and niche audiences. What does that mean? Well, OTT stands for over-the-top TV. This basically is any video that is not served to customers through a traditional television system such as cable or satellite, which is what our grandparents are still using. Basically, it's any TV delivered directly over the internet through laptops, tablets. Every TV nowadays has a connected smart TV or devices like Apple, Amazon, or Roku. Why do they say they deliver clients rich insights and campaign intelligence? Because they have app science. So I know a lot of people will say, well, this looks a lot like the Trade Desk. It's probably their largest competitor and it is a much larger company. But what Sabio Holdings is saying is that they have better data to reach more niche audiences, whether you're looking for a more multicultural audience, or you're looking for a more specific geographic audience targeting a certain person. App Science and Sabio Holdings might be the advertiser for you versus some of the more generic options. And finally, Creator Television, which is the newest addition to their revenue verticals. Creator Television won the most significant newcomer channel at some award show. They're released now on Amazon Fire TV and Xumo. So the purpose of Creator Television is to create another possible way for them to advertise some of their clients to the potential customers at higher margins through their own product, controlling the data, controlling which end users see their content. So Sabio Holdings is currently not a turnaround story. They have a very successful growing core business. Their plans are to expand that core business internationally. Right now, they are growing very successfully in the United Kingdom. In addition to that, they're offering new services of programmatic, which is going to expand their customer base. And then on top of that, to hopefully expand all of their other revenue verticals, they now have Creator Television, higher margins, more reach, better data. This is the plan for momentum and growth for Sabio Holdings. The market is obviously not liking these growth plans. So what is going on with the financials to scare people away from Sabio Holdings? Don't forget, not a financial advisor. I don't know anything about you, your experience level, the capital you're working with, your risk tolerance. So this is not a solicitation to buy, sell, or hold Sabio Holdings. This is simply me communicating to you my opinion on a stock for you to go do your own research, do your own due diligence, and make your own decisions. This is a screenshot from my first video on Sabio Holdings in early 2024, talking about 2023 revenue. And it was showing two different revenue tracks here. You had this one revenue track that had a CAGR of 37%, and then you had this second revenue track that had a CAGR of 86%. What is the difference? Because of Sabio Holdings' niche audience and extremely good data, it is a favorite of politics, politicians, and elections. So this extremely high revenue growth trajectory here of 86% is during political campaign years, U.S. elections, U.S. midterms, mayor races, governor races. This slower CAGR of 37% right here is non-election years, which is what Sabio Holdings in 2025 currently finds themselves in. You can see again this screenshot from back in 2023 showing the decline in revenue in 2023 because this was a non-election year. However, the trend was still up. It's just it shot up a little higher than normal on election years. Very simple cycles to understand, very repeatable, where you get this share price, revenue, and everything else moving up on election years and then down in non-election years. Sabio Holdings is a Canadian listed company with a Canadian share price and a Canadian market cap. However, all of these numbers I will be showing you are in US dollars. So Sabio has a 19.742 Canadian listed market cap. They have $2 million in cash, $11.4 million in current assets. Balance sheet is a little bit wobbly. The $10.1 million in accounts payable. They have this loan payable of $7.7 million, which they say they basically use for account payable working capital uses, right? So obviously balance sheet is not one of their strengths. If I had to rate this out of 5 stars, I would say 2 stars or less for Sabio. Where they do really recover is the growth of the top line of their business, right? Revenue is up, gross profit is up significantly, even on what is supposed to be a down year. And then in addition to that, I know they have balance sheet issues. They are not diluting shareholders. There's very high insider ownership of Sabio Holdings, very low dilution, even though they're low on cash. That is impressive. Again, though, bottom line here, net loss for the period does need some work. So again, looking at return drivers for 10x stocks, is Sabio Holdings getting sales growth? Absolutely. Are they getting profit margin growth? No. They need some work on that. Is that getting them multiple expansion? No, because they're not getting the profit margin growth yet. Can they get there? They currently have a little over $2 million, and they recently burned $2.9 million in operating cash in the past 6 months. They do need to get there fairly quickly. So this is a common occurrence in 2025, not just with Sabio Holdings. There are a lot of companies out there that are still getting growth as small companies. Without growth as a small company, you die. So they are growing their core business. However, like many other companies out there this year, they have to spend a little bit more to get that growth, and it isn't transitioning to the bottom line as well as people would like to see. And that is definitely the risk of Sabio Holdings, is running out of cash, having to do a financing here at very low share price with very high dilution. But what is the potential reward? So Ian Castle says that in bull markets, the only thing that matters is growth, and in bear markets, the only thing that matters is the balance sheet. I think we're in a bear market, at least for Sabio Holdings, because as I've shown you, the balance sheet is weak and share price is way, way, way down. So what investors, what shareholders are doing right now are gambling on the future. They're looking into the future, seeing that Sabio Holdings has the potential to have a very strong 2026 due to political revenue coming in that's higher margin. People are gambling that they're going to be able to use that revenue to pay off the debenture so they don't run out of cash like I talked about. They are gambling the market will be okay in 2026, that growth will be recognized, that margins will expand, and that future cash flow will be coming in. Sabio has a new product release continuing to gain traction, that is Creator Television. They are accelerating their global expansion into the United Kingdom. They have growth in their core business despite the macro headwinds, and despite it being a non-election year, the core business is growing. They are well positioned for continued growth in their core business, along with the expected 2026 political spend in the election year. The next 12 months, if Sabio Holdings can execute, is going to be an exciting year for growth, hopefully a return to profitability. Where can share price go from there? So what do you think of Sabio Holdings? Down 52% from their 52-week high. They now need 100% gain in share price just to return to that level. But 2026 is going to be a political year. Their core business is growing, and they have multiple other catalysts and improvements to their revenue stream. Is this the bottom for Sabio Holdings? Do they fall through this price and potentially go to zero? That's always a risk with microcap stocks. But if they can execute in 2026, well, my last 2 videos on Sabio Holdings did very well. I thought it was time for another one. And to continue finding, research, and discussing stocks like Sabio Holdings, go take a look at commonsenseinvesting.ca. It will show you the multiple ways, either through Patreon or Substack, to access my Discord. You've been watching Common Sense Investing. My name is Cameron. Thank you for your time.